The cashier swipes your card again. Nothing. She tries tapping it against the reader. Still nothing. Behind you, someone mutters something about their app not loading. The person at the next register is holding up their phone, confused. The manager is already walking over, and you can see it in her face before she says anything. She doesn't know what's happening either. This is how it starts. Not with an announcement, not with a warning. Just a moment of friction that shouldn't exist, multiplied across millions of transactions, all at once. In this simulation, we're exploring what happens when the credit and debit card network suffers a catastrophic failure. Not a temporary outage, not a localized glitch. A total, systemic collapse of the electronic payment infrastructure that processes roughly 140 billion card transactions annually in the United States alone. We assume the failure is technical, not political. Perhaps a cascading software failure across multiple processors. Perhaps a cyber attack that corrupts transaction ledgers beyond recovery. The cause matters less than the structure of what follows. What matters is that the system doesn't come back. Historically, payment systems have experienced outages. In 2018, Visa's network went down across Europe for nearly 10 hours. Transactions failed, commerce slowed, but everyone knew it was temporary. The psychology of a temporary outage is fundamentally different from the psychology of uncertainty. When people don't know if the system will return, behavior changes in ways that are predictable and devastating. The first 3 hours are defined by confusion, not panic. Most people assume it's their bank. They try a different card. Then they try their phone. Payment apps aren't loading either. Some people have cash. Most don't. The average American carries less than $40 in physical currency. In major cities, that number drops below 20. Yeah, registers are closing. Stores are turning people away. Gas stations stop pumping. The ones that take cash are forming lines within minutes. But confusion has a short half-life. By hour 4, social media is moving faster than official communication. Millions of people are posting the same experience. The payment network is down. No one knows why. No one knows for how long. The major card networks issue statements about technical difficulties and restoration efforts. The statements are vague. They have to be. If the problem is as deep as the engineers suspect, there is no restoration timeline. And that's when the psychology shifts. By the evening of day 1, cash becomes the only functional medium of exchange. But cash is no longer distributed evenly or abundantly. The Federal Reserve estimates that only about 8% of all consumer transactions in the United States are conducted in cash. The infrastructure that moves cash, replenishes ATMs, and circulates physical currency is built for a hybrid economy, not a cash-only reversion. ATMs begin running dry within hours. The machines that would normally be refilled twice a week are now being drained in under an hour. Banks don't hold much cash on site anymore. A typical branch might have $50,000 to $200,000 in the vault, depending on location. In a city of 1 million people, that's not enough. Lines form at every bank that's still open, but banks close early. Security concerns, staff shortages, insufficient cash to meet demand. By nightfall, most branches have shut their doors with crowds still waiting outside. There's no violence yet, just frustration and a growing, unspoken understanding that something is very wrong. Day 2 is when the supply chain starts to fracture. Retailers can't process payroll. Employees don't show up. Delivery drivers can't fuel their trucks without card payments. Fuel stations that only accept cards, and that's the majority of them, are effectively closed. The ones accepting cash are rationing, 10 gallons per customer, then 5. The trucks that replenish grocery stores, pharmacies, and gas stations run on tight schedules and electronic invoicing. When payments don't clear, logistics companies halt operations. It's not a decision made out of malice. It's a contractual and operational reality. If fuel distributors can't confirm payment, they don't release fuel. If wholesalers can't process transactions, they don't ship goods. Grocery stores begin to empty, not because of shortages at the source, but because the mechanism that moves goods from warehouses to shelves has frozen. Stores that remain open are cash only, but they're limiting purchases. 2 items per customer, 1 loaf of bread, 1 gallon of milk. It's not enough. People are buying whatever they can carry. The elderly and the disabled, those who can't stand in line for hours, are left with nothing. Pharmacies face a more immediate crisis. Prescription systems are linked to insurance networks that process payments electronically. Even if you have cash, many pharmacies can't dispense medication without verifying insurance. Those systems are down. People with chronic conditions, diabetes, heart disease, asthma, are now in a race against their remaining supply. Some have a week, some have 2 days. By day 3, the economy is no longer functioning. It's rationing, bartering, and in some places beginning to fray. Restaurants are closed, not just the chains, but the small independent places that operate on razor-thin margins and can't survive 3 days without revenue. Employees aren't being paid. Rent is due. Utilities are still running, but the automatic payments that keep the lights on for millions of households are failing. Power companies and water services don't shut off immediately. There are grace periods, legal requirements, but notices are going out. The assumption of continuity is breaking. Hospitals are still operating, but they're under strain. Emergency rooms are filling with people who can't access their medications, panic attacks, diabetic episodes, cardiac events triggered by stress. The hospitals themselves are facing payment chaos, suppliers are delaying shipments, staff are worried about their own bills, morale is collapsing as quickly as the economy outside. This is when the second-order effects begin. It's not just that you can't buy things, it's that the people who make, move, and sell things can't operate either. Farmers can't pay for fuel to run equipment, truckers can't afford to drive. Factory workers stop showing up because they haven't been paid and don't know when they will be. The entire structure of modern commerce is built on the assumption of frictionless transactions. When that assumption fails, everything downstream fails with it. By day 4, law enforcement is stretched thin. There's no widespread looting yet, not in most places, but theft is rising. People are taking what they need. Gas is siphoned from parked cars. Stores that tried to stay open are closing permanently, either because they've been robbed or because the risk is too high. Police departments are dealing with staffing issues of their own. Officers are calling in sick, not because they're ill, but because they're trying to take care of their own families. The social contract is still holding, but it's under tension. Governments are attempting to respond, but the tools available are limited. Emergency broadcasts tell people to remain calm, to use cash, to avoid hoarding. But trust in those messages erodes quickly when cash isn't available and stores are empty. Some cities begin distributing emergency food supplies, but the logistics are improvised and insufficient. There's no existing system to feed millions of people outside the normal commercial infrastructure. FEMA has disaster plans, but those plans assume localized events, hurricanes, earthquakes, not a simultaneous nationwide economic paralysis. Day 5 is when people start looking for someone to blame. Conspiracy theories spread faster than accurate information. Some believe it's a cyber attack. Others think it's deliberate sabotage by financial institutions. A few claim the government is engineering a transition to a new currency system. None of these explanations matter as much as the fact that people need an explanation. Uncertainty is unbearable. In the absence of official clarity, people create their own narratives. Financial markets are in free fall. Trading has been halted multiple times. Institutional investors are pulling out of anything perceived as vulnerable. Banks are facing a crisis of confidence even though most consumer deposits are technically safe. The problem is access. If you can't withdraw money, if you can't spend money, the distinction between having it and not having it becomes meaningless. Bank runs would already be happening if people could get to their money. Instead, there's a kind of frozen panic. Everyone knows the system is broken. No one knows if it can be fixed. By day 6, the psychological breaking point arrives for many. The people who believed this would be resolved, who thought the government or the banks or someone would fix it, are realizing that no one is in control. The systems we've built are more fragile than we understood. A single point of failure, the electronic payment network, has cascaded into total economic paralysis. There's no backup. There's no redundancy. We built efficiency, not resilience. Some communities are adapting. Neighborhoods are organizing barter systems. Local shops are extending credit based on trust. People are helping each other. But these are small pockets of coherence in a larger collapse. The vast majority of the population lives in areas where social trust is thin, where people don't know their neighbors, where the only thing holding the system together was the invisible architecture of electronic transactions. Food is now the primary concern. The average American household has enough food for 3 to 7 days. We're past that threshold. Hunger is no longer hypothetical. Parents are skipping meals to feed their children. The elderly are going without. Food banks are overwhelmed and running out of supplies. The trucks that would normally replenish them aren't coming. Day 7 is when the realization sets in that this may not be temporary. A week is long enough for the optimism to die. Long enough for people to understand that the old normal isn't coming back anytime soon. Some gas stations have fuel, but no way to sell it. Some warehouses are full of food, but no way to distribute it. The abundance still exists, but the mechanism to convert abundance into access is gone. Those who had cash, who stocked supplies early, who lived in areas with strong community networks, are surviving. Those who didn't are facing a reality that most people in developed nations have not experienced in generations. True scarcity. Not the scarcity of inconvenience, but the scarcity of desperation. Historically, societies don't collapse uniformly. Some areas maintain order longer. Wealthier suburbs with lower population density and stronger social cohesion tend to hold together. Dense urban centers with high dependence on external supply chains fracture faster. Rural areas with local food production and less reliance on electronic systems fare better, but only if they had cash reserves or barter networks already in place. The financial institutions themselves are in chaos. Banks are technically solvent, but solvency is a concept that only matters when the system is functioning. Credit card companies are facing the possibility that their entire business model has evaporated. The billions of dollars in outstanding balances are still owed, but there's no mechanism to collect, no mechanism to enforce. The legal and financial structures that underpin modern debt are showing their dependence on technological continuity. And then there are those who benefit, not openly, not loudly. But precious metals dealers, cryptocurrency exchanges that still function, anyone holding hard assets or foreign currency that isn't tied to the failed payment network, they're watching a massive transfer of perceived value. When trust in one system collapses, it flows toward whatever seems more stable, even if that stability is illusory. The government is preparing more drastic measures: discussions of emergency currency issuance, physical vouchers, military distribution of food and fuel. But these measures take time to implement, time that people don't have. And every day that passes without a solution is a day that trust erodes further. Trust in banks, trust in government, trust in the idea that the systems we built are robust enough to survive a shock. This simulation assumes the payment network fails for 7 days. In reality, even a 3-day failure would be catastrophic. 7 days would reshape the economy permanently. Some businesses would never reopen. Some supply chains would never fully recover. Consumer behavior would change. People would hoard cash. They would lose faith in digital systems. The psychology of spending, saving, and trusting institutions would be altered for a generation. The quiet truth is that we're closer to this scenario than most people realize. The infrastructure that processes every swipe, every tap, every online purchase is centralized, interconnected, and vulnerable. Redundancies exist, but they're designed for small failures, not systemic collapse. We've built an economy that's efficient to the point of fragility. And fragility in complex systems doesn't announce itself. It just breaks. Somewhere, right now, someone is swiping their card at a register, and it's working. The transaction clears in seconds. Money moves invisibly from one account to another. The system hums along, unnoticed and unappreciated, until the moment it doesn't. If you're still watching, you understand that preparedness isn't paranoia. It's pattern recognition. The systems we trust are only as strong as their weakest point. And we've built a world where that point is thinner than we'd like to admit. You might want to keep watching.